day and eyeing the London Open, of course, which is imminent. Dr. Stephen Nash from FIG. Dr. Nash, welcome to you. I had a look at the charts, the CAC, the Xetra DAX and indeed London's 100 share, they're all expected to go higher. What are you looking out for tonight as market moving events in that region?
Look, I think it was interesting to see what happened in Portugal on Friday with regard to attempts to renegotiate the bailout package there. I think the market will be very focused on that at the moment. We've seen an increasing trend in yields, particularly the 10-year part of the Portuguese curve also. If you look at the 2-year part, substantial rises in that shorter end, which really stops the government from financing, and even in the short end.
So for the uninitiated, what on earth is going wrong in Portugal? What has changed today that was different last month?
There were a few resignations from some of the senior ministers there, and also there's been calls for renegotiation of the bailout package for Portugal. So the market is concerned.
Well, there were resignations from our front bench, and yields don't blow out, Dr. Nash. I mean, come on, let's be honest about it. This is but a pimple on the derriere of Europe, and we're getting worried about it. We're chewing up 2 minutes so far on it.
I think to some extent, yes, it's a small country, but of course these peripheral European countries have caused a lot of problem in the past. There's still underlying issues with the economies in these regions, and I think the market's very quick to act, and it has shown in the last few weeks, some quite large moves in those Portuguese 10-year.
So what does Mario do next ECB meeting? Just look ahead and on past performance, he's just going to jawbone his way through this, isn't he?
Look, he's tried to indicate that rates are staying where they are or possibly going lower. I think that's an important development in the last few weeks, that they've gotten onto this forward guidance the way other central banks have used that sort of language. So, yeah, I suppose there's more jawboning to come from the ECB. But
a bigger problem, of course, is France. Let's pull no punches. David, come on this one. Fitch, again, late to the party. Surprise, surprise. It comes out. It cuts the rating. It's worried about growth. Again, what's new? Pussycat. Yeah,
absolutely, exactly as you said. Nothing really. And look, I suppose with Dr. Nash is saying, is with short term, it's a bad sort of look, when you have all these resignations. But really, it could also be that it was needed. Some of these allegations aren't too great. So clean up would probably be a good thing medium term.
For Australian investors saying, David, I love to go to Paris and all the rest of it. Can we make a play on beaten down corporates as of now? What would you say to them?
You probably can, but we're a tyranny of distance. Why bother?
Even in this global age of Skype and all the rest of it.
Yeah, we've got so many good companies here that have got. If you really want to, buy things, you can buy them here.
Well, then again, 2/3 of the market is not investment grade. I keep reminding you of that, but it's not, is it? It's sub-investment grade. 2/3 of this market.
But does that matter? Who's defining investment grade?
Well, I mean, you want a return on your investment. You don't want to be losing money and just giving it good money after bad to...
Sure, but we've seen, having said that, you call investment grade, there can be rating agencies saying that. We know what the rating agencies, how much trouble they got into in the GFC when it was completely wrong.
Right.
So what's a blue chip? You know what I mean? So many times I've seen people with blue chips and actually they've just got smashed on 75% of their money. So you've got to be very careful, I think, of just going, right, something sub-investment grade, I'm not investing in it.
But it just means that a whole continent is off limits for Australian investors. That seems an awful kind of derogation of duty.
Talking about Europe,
yes.
My opinion is, like probably most, it'll just bumble along. It has got some real structural issues, whether they be political or tax-wise, etc. Each individual countries. So I don't really see a reason to be there. I think I'm actually quite positive about the UK. I think it's actually showing signs of life, which people on this side of the world don't really realise, apart from this stupid cricket team. But,
another discussion.
Issue.
Exactly. Well, to you on that one, Dr. Nash, I know you go over to old Blighty often enough. What are you seeing? And again, what's the kind of demand like there for issuance? Are companies making hay at still relatively cheap borrowing environment?
Look, a lot of the banks have found it difficult to issue, and there's been quite a dramatic decline in issuance by a lot of the European banks. Obviously, there's not much demand for credit at this point, and that's one of the reasons that the issuance has been so low. But there's also a lot of changes going on in the capital adequacy side, making it more expensive for banks to issue, and a lot of banks are waiting for clarification on a lot of these matters. So it's all been fairly quiet in terms of European issuance. And,
because there is, let's be honest about it, there is no corporate bond market, so to speak, of in Australia. So how can you get your clients into that space in the UK, if not broadly in Europe?
Look, I disagree with that comment about there not being a corporate bond market here. I mean, we've got quite liquid bonds by the major banks, major corporations, Telstra, Qantas and others. I mean, relative to GDP, we've got quite a good sized market here, reasonably liquid, and obviously we've got a fantastic Commonwealth market that trades very actively. Our Commonwealth bonds are one of the most liquid bond markets in the world. So I think that statement's a bit out of whack.
Well, I'm thinking about relative sophistication. When you say it's relatively liquid,
yeah.
I mean it's effectively all owned by offshore players, our foreign debt.
There is quite a large interest in our bond market from overseas. Yes, there should be more participation from the local market.
But there's no issuance, is there, so to speak? How's that a liquid market? The government's not borrowing.
We have quite a large Commonwealth market, I think, and also the futures market.
Come on, it's dead in the water, Dr. Nash. You know it. No one is issuing. The government is committed to balancing the budget. They don't want to borrow an extra cent, let alone 100 million.
There is quite a lot of turnover in our market. I mean, daily it's one of the most liquid bond markets in the world in terms of futures and physicals.
All right, we will agree to disagree on that score.
Thank
You have
you.
a good evening. Dr. Stephen Nash from FIG.